This skill training video has been produced by SEMCA in collaboration with PSSC and CNK. This video is aligned with the job role Supervisor Street Light Installation and Maintenance, QP code PSS/Q2101, NOS code PSS/N2101. We are now going to learn the step-by-step procedure for periodical progress reporting to higher management. Reporting to management. Reporting to management is a process of providing information to various levels of management to enable in judging the effectiveness of their responsibility centers and become a base for taking corrective measures if necessary. Definition of reporting to management. Reporting to management can be defined as an organized method of providing each supervisor with all the data and only those data which he needs for his decisions when he needs them, and in a form which aids his understanding and stimulates his action. Objectives of reporting to management. The supervisor has to prepare the report for the following purposes. 1. Means of communication. A report is used as a means of upward communication. A report is prepared and submitted to someone who needs that information for carrying out functions of management. 2. To satisfy interested parties. The interested parties of management report are top management executives, government agencies, shareholders, creditors, customers, and the general public. Different types of management reports are prepared to satisfy the above-mentioned interested parties. 3. Legal requirements. Some reports are prepared to satisfy legal requirements. The annual reports of company accounts are prepared to furnish the same to the shareholders of the company under Companies Act 1946. For example, for legal requirements, the audit report of the company accounts is submitted before the income tax authorities under the Income Tax Act 1961. 4. To develop public relations. Reports of the general progress of business and utilization of natural resources are prepared and presented before the public. It is useful for increasing the goodwill of the company and developing public relations. 5. Basis to measure performance. The performance of each employee is prepared in a report form. In some cases, group or department performance is prepared in a report form. The individual performance report is used for promotion and incentives. Group performance report is used for giving a bonus. 6. To control. Reports are the basis of the control process. Based on reports, actions are initiated and instructions are given to improve the performance. Advantages of reporting to management. 1. It helps the management to understand the functional areas of the organization. 2. It is used as a tool to identify the areas of weaknesses and any untoward or unusual occurrences. 3. The performance of employees is regulated and controlled. 4. The management can devote more time to policy formulation and future development. 5. The future course of action is taken with great care. 6. Responsibilities fixed on individuals and teams very clearly. 7. It helps the management to prepare the budget according to the ground reality of the business, street light installation conditions. 8. Reports provide a basis for deciding operating policy, the volume of sales or production, stock policy, quality production, product design, and so on. 9. It helps the management to maintain the operational efficiency of all the employees and the business in general. 10. The management can find the reasons for poor performance and takes corrective actions for avoiding such happenings in the future. Types of reports. 1. External reports. These reports are meant for external parties such as the government, shareholders and stakeholders, other parties, and so on. For example, published financial statements of companies. Copies of such reports are also to be filed with the registrar of joint stock companies and with the stock exchange. In the interest of general understanding, these reports are expected to conform to certain minimum standards of disclosure and disclose certain basic details under the Companies Act 2013. 2. Internal reports. These reports are meant for internal use of different levels of management, such as top level, middle level, and junior level of management. Hence, the approach to reporting would vary according to the reporting level. These reports do not have to conform to any statutory standards. While the reports meant for top management have to be comprehensive and concise, the reports to operating supervisors should be specific and detailed. 3. Routine reports. These reports cover routine matters and are submitted at periodical intervals regularly. For example, an everyday work progress report on streetlight installation site, variance analysis, financial statements and budgetary control statements are routine reports. They are submitted to different levels of management as per a fixed schedule. Routine reports are usually printed or cyclostyle forms with blank spaces to be filled in. Most internal reports are of the nature of the routine reports. In general, routine reports exhibit daily progress. 4. Special reports. Reports that are submitted on particular occasions on specific requests or instructions are special reports. When problems arise in a business, they are to be investigative. The results of investigations and the recommendations are submitted by way of special reports. Examples of some of the special reports are 1. Reports of information about competitive products. 2. Reports by the cost accountants on the implications of price changes on the cost of products. 3. Reports regarding the choice of products or selection of a production method, etc. 5. Operating reports. These reports may be classified into control report and information report. A. Control report. This is an important part of the control process and helps in controlling different activities of an enterprise. It provides information properly collected and analyzed to different levels of management. The framework of this report is determined by the needs of the company. B. Information reports. These reports provide information which is very useful for future planning and policy formulation. They may take the form of trend reports or analytical reports. Trend reports provide information in a comparative form over a period of time. On the other hand, analytical reports provide information in a classified manner. 6. Financial reports. These reports contain information about the financial position of the company's business. They may be classified into static reports and dynamic reports. A static report reveals the financial position on a particular date, for example, the balance sheet of a company. On the other hand, dynamic report reveals the movement of funds during a specified period. For example, funds flow statement, cash flow statement. Why reporting is needed at different managerial levels? Generally, reporting levels in the internal management fall into three broad categories. They are top level, middle level, and junior level management. They need different kinds of reports depending upon the nature of their functions. 1. Top management level. The top management is primarily concerned with policy formulation, planning, and organizing. Hence, their function is to evolve proper plans, to carry on the proper delegation of authority to subordinates to obtain effective and efficient utilization of resources, and to promote appropriate development schemes. 2. Board of Directors. Quarterly statements on production costs, machine and labor utilization, quarterly cash flow statements, and quarterly income statement and balance sheet. Finance Director. Monthly abstract of receipts and payments and monthly cash flow statements. Production Director. Production cost statement, department-wise machine and labor utilization statements, and material scrap statements, overhead cost and production statements. All these statements are to be presented to authorities every month. 3. Sales Director. He receives the following reports monthly: reports on orders received, orders executed, and orders kept pending, division-wise. Reports on selling and distribution cost, division-wise. Reports on credit collections, balances, and bad debts, division-wise. 4. Middle management level. The departmental managers such as production, sales, and so on are concerned with the execution of plans formulated by top management. They act mainly as coordinating executives to administer policies, direct operating supervisors, and evaluate their performance. Hence, the reports submitted to them should enable them to exercise these functions more effectively. They may require reports at shorter intervals, say weekly, fortnightly basis. For example, the works manager requires weekly reports on idle time, idle capacity, scrap production costs, quantity produced, and so on. The sales manager needs fortnightly reports on budgeted and actual sales, credit collection, Orders booked, executed and pending and stock position product-wise and area-wise. 5. Junior management. Foremen, supervisors and so on constitute this level of management. They are interested in reports that will apprise them of the progress of jobs under their control. Some of these reports are in the form of paper having proper format. They may need reports on a daily or weekly basis. For example, the shop foreman requires daily reports of idle time and machine utilization, daily scrap reports and daily reports of production. Actual and budgeted sales area supervisor needs weekly reports on salesman-wise, orders booked, executed and outstanding credit collections, and outstanding and so on. Typically, each supervisor streetlight installation and maintenance reports to the junior engineer of the installation and maintenance team. In most places, there is no technician. Streetlight installation and maintenance role, so the assistant technician streetlight installation and maintenance reports directly to the supervisor. Each supervisor has a team of assistant technicians. Each assistant technician, streetlight installation and maintenance, typically has 2 or more technical helpers to support them.